All right, ladies and gentlemen, welcome to another episode of the Resource Insider Podcast. As usual, I am your host, Jamie Keach, and I am coming to you from the Inventa Capital Studio. Now, today on the podcast, I sat down with an old friend of mine, a gentleman named Mike Allen. He is the president of Northern Vertex, a mining company with assets in Arizona and Nevada. So we talk about Northern Vertex's recent merger with Eclipse Gold. We talk about the work being done on the Moss mine, their asset in Arizona, and we talk about the recent drill results at the Hercules project in Nevada. This is a really fun, really cool conversation that gets into the weeds a little bit on Northern Vertex and mining in the Western United States in general. So, without further ado, let me please introduce Mike Allen, president of Northern Vertex Mining. Mike, welcome to another episode of the Resource Insider Podcast. You are our second guest to actually make it into the studio. I got a lot of shit from people last time about how ugly our studio was, so I've put this plant here now. I think it's it's much more picturesque at this point.
At least, are you sure they weren't talking about us being ugly in the last studio? Or
we had Dustin Perry from Kingfisher on. He's a little rough around the edges. It might have been that. Yeah.
Okay, all right.
So this is Is it our second or our third conversation? I think it's our third sort of recorded conversation.
Okay.
Am I wrong on that?
I was going to go with two.
Okay.
But,
well, we've had a lot of non-recorded conversations. We'll call this one number 2. The last time we spoke, you were the CEO of Eclipse Gold, an exploration play focused on Nevada. I was an early investor. Resource Insider members were early investors into that project. A lot has changed over the last, call it, 4 to 6 months.
Correct.
Why don't you tell us what you're doing today, and we'll kind of give the Cliff's Notes version of how that all came together.
Okay. You're right. The last time that we talked, I was the CEO of Eclipse. In December of 2020, we announced that Eclipse was going to merge with Northern Vertex. Northern Vertex is an Arizona producer. It's got the Moss mine about 2 hours southeast of Las Vegas. So what we did is bringing the two teams together, enhanced the management. Doug Hurst, who was the director of Eclipse, became the chairman of Vertex. Subsequent to the amalgamation of the two companies, there was a management change. I became the president of the company. And it really is moving forward, bringing the best of both teams together and being able to unlock the value for shareholders. What we see as a core strategy of Vertex going forward is it's something like what my past life, where I was the CEO of a company called Northern Empire, where we had a backstop of value, a great exploration upside, and it led to a great win for shareholders. So what we have here in Northern Vertex is we've got the backstop of value for the producing mine. One of the things that I think that most investors don't know about is the upside potential of the Moss. Recently, Vertex permitted 538 drill sites, and so we're going to be able to articulate that upside to the market. And then the merger also put in a pipeline project, which was the Eclipse asset, the Hercules Gold project, which is just outside of Reno.
Okay, so we're going to get into all of that today. We're going to get into what's going on at the Moss mine, Northern Vertex's sort of original asset. We're going to talk about Hercules, of course, which came from Eclipse. This is a particularly compelling company and interesting story for me because, as you know, and some of our longer-term listeners know, Resource Insider had invested independently several years ago into Northern Vertex. We were early shareholders in that. We made great returns there. We also invested independently into Eclipse before there was ever any conversations here. And so to see these teams come together and sort of a recognition of mutual value was very validating for us and kind of very exciting for that. And a big, outside of the geological sort of upside of both projects, a big reason I invested in both teams or in both companies was because of the teams involved. And I think this is a really interesting and kind of cool amalgamation of teams that are going on here, right? Because you have the guys that were coming from Eclipse, yourself, Doug Hurst, who I think is probably worth getting into a little bit for people who haven't heard of him before, Marcel de Groot. And then you have the backers of Northern Vertex, which is Greenstone Capital, a rather large private equity firm out of London.
Yep.
You've got Mavericks Metals, who's got a silver stream on the Moss Mine, and of course is led by Jeff Burns, who's on the board, and longtime CEO of Pan American Silver, and amazing track record. So, I mean, I think you've taken two great teams and sort of combined them into a really stellar team. And Christ, I have no idea what the combined sort of value creation must be of the various executives and directors and whatnot that are involved at this point.
It's actually over $6 billion.
There you go. I was going to say, I assume you guys are probably, that should be a slide in a presentation if it isn't.
It is.
All right. So tell me, day to day, what's it look like now? You're the president. You've brought on Warwick Board, who, incredible geologist, who was your VPX and is the current VPX. Doug Hurst as chairman.
Yeah.
What are you guys focused on now? Who's doing what? What's the plan going forward?
Well, as the CEO of the company, I mean, my role is value creation. We got a lot of different ways of doing that, and I think that the biggest thing that's going to drive a re-rate for the combined Northern Vertex is really articulating the full potential of the Moss in the near term. As I said, we've got the 538 drill sites. We've got 3 rigs turning on the property right now. The immediate focus is actually to do a resource update on the Moss and really articulate a backstop of value, and then be able to articulate what the upside is. There's a lot of veins that are showing on surface where we've got high-grade surface samples, and we're going to be able to drill those out in the coming months. So I think you're going to see a big re-rate with the company as we start to see where that potential or where that upside is to the Moss property and the mine itself.
Okay. So, I think it's important to talk about a couple things here. So, I first went and visited the Moss Mine. I believe it was in the winter, like about December 2018, and Ken Barry, the CEO at the time, sort of took me out and sort of sat me on the edge of where they had their mining licenses up to, and then showed me this Moss vein that's like shooting down into the distance. It's like a spine of a dinosaur's back.
That's exactly right.
So blatant there, and he's just, we're going to keep mining that thing and keep going forward.
Yep.
And at the time, they were sort of unlocking access to that with permitting.
Correct.
And so you've mentioned 2 things that I think are worth talking about. One, you said 500 and something drill holes were permitted.
Correct.
I'd like to talk about what the significance of that is in places like Arizona, actually are. And 2, you talked about other veins, because I think it's worth explaining to people who haven't had the opportunity to go there that the Moss Mine as it exists, and I think I'm right on this, is all along one vein, right? It's only mining the Moss vein, right?
There's a secondary set, but it gets the Ruth, but close enough, yeah.
So it sounds to me like you guys believe there's the potential to expand that along multiple veins and potentially massively upgrade the resource. Am I understanding that right?
That's the hypothesis. So if I can use this crack on the table, this 1,500 meter section is the permitted Moss mine, and further to the east, there's another 4 kilometers.
That's what I'm looking down when I'm standing.
That's the dinosaur spine. Don't forget, there's also another 1.5 kilometers further to the west. So you've got a total strike length of about 6 kilometers, 6.5 kilometers to work with. This 1,500 meters has got the published resource, and that's what's driving the mine.
And that's about 500,000 ounces. Am I right?
That's correct. Yeah.
So potential to upgrade that. But what about, you're talking about other veins in the area?
Correct. So this is the Moss vein, and this is a great table for for this. Further to the south, there's what's called the Oatman or West Oatman vein. Yep. And further to the north, there's the Old Timer. And how these all are interrelated, we've actually got a fairly decent geophysical package. They all interrelate. It's forgive the geologist here. It's a big sinoid loop, and it gives you those parallel structures. Okay,
so these veins are running, boom, parallel to each other. What's the spacing on these things? Are these hundreds of meters apart, kilometers apart?
Yeah, probably about a kilometer would be the step between.
Okay.
And so the vision of the mine is it becomes, you've got your primary crusher as the spoke, and you've got several pits moving in sort of the hub and spoke model.
So you could have pits to the east, pits to the west, pits to the north, pits to the south,
Yeah.
and the original Moss project's right here, and you're trucking back and forth. And
Yeah.
So I remember sort of one of the initial challenges when I first went there was the idea of, so how do you upgrade the Moss mine from producing more than 50, 60,000 ounces a year, given the sort of constraints of the pit and the geography? Is the solution here not to just sort of refigure the Moss pit, but to have these multiple pits up and going and operating, or is it more complicated than that?
No, actually, that's a fairly simple way of articulating it. It's the number of working faces. Right now, the Moss has essentially got one working face, and as you have these multiple satellite pits, the spokes on it, then you get more working faces. You can bring more tons into the primary crusher and get it out onto the leach pad. You're not going to be as confined as just having a single working face to work with.
Okay. So I want to be sort of careful how I ask this question, because I don't want you to speculate, but I do want to get for people to have an idea, and for myself to have a better idea, like, what is the potential scale here? If, when I first looked at this, it was, Moss is about 500,000 ounces. Maybe there's the potential to get it up to 1 million ounces there.
Yep.
Are you guys viewing that differently today than was previously looked at?
I think that the potential is beyond 1 million ounces, quite substantially. I mean, it's simple math to start thinking about the potential. If the 1,500 meter strike lengths gives you the published resource that we have right now, quad it out, and then double it or triple it again, and you start to see where the potential could be. Obviously, not every hole is gonna hit. Obviously, there's going to be parts of the vein that aren't productive. But having you having been there, me having been there, it's actually fairly simple exploration. There's the vein.
Yeah.
Walk along it with a drill rig, and that we already know from surface sampling, historic mining in the area, that vein runs. So it's just a question of how does it pull into an open pit scenario. So,
and I think, heavily qualifying this, like doing the math in my head, there's a pretty easy pathway to 2 to 3 million ounces there in the event that we do find, comparable gold grades and over, comparable intersections across the vein in different areas.
Yeah.
So that gets kind of exciting all of a sudden.
Well, then, once you get past that million, then you're starting getting into relevance. You can start stepping up the operation. You've got a million ounces on the books. You start looking at a 10-year life of mine at 100,000 ounces a year, and you start to get into serious production, serious capital, cash flow, and all those wonderful things.
And then there's a lot of very large gold companies in the United States that would be looking to add something like that to their portfolio potentially.
Well, this is also one of the things that being in the Western U.S., it's not just U.S. gold producers that are looking to work in the States. There's a lot of companies that are looking for jurisdictional risk and saying, okay, having an asset in Arizona versus having something, we've got a great asset in a more challenging jurisdiction, and we've got
very politically correct of you, Mike.
Well, thank you. In a challenging jurisdiction, but they lower their jurisdictional risk by having an asset in the States. So you see a lot of companies that are doing that, and I think it's a good business model to diversify the risk.
So let's talk about Arizona. Okay, you've got patented land, you've got unpatented land, you've got sort of the challenge of getting these drill platforms permitted or drill holes permitted. Talk to me about what your land package is, and maybe can you define for people at home what the difference between patented and unpatented land is in this part of the world?
Yeah, I mean, patented land is essentially private property. That's the easiest, most simple way to describe it. You own the surface rights, the mineral rights. You own it all. Public or unpatented claims, it's you have the mineral rights, but you're also under the jurisdiction. It's public land. So depending on where you are, you're dealing with either the BLM or the U.S. Forest Service. It's all under Department of Interior, and so you've got a bit more regulations to work with. But it really is. This is the most mining in the U.S. is done on public property, and so you have to permit and go forward that way.
And Northern Vertex over the past couple of years has done most of the heavy lifting associated with that. Am I right on that? Because I mean, we've again been invested in this since 2019.
Yeah.
And we waited really with kind of bated breath for them to unlock that patented land, or unpatented land rather.
Correct.
And when we did, that was part of the catalyst that really saw, from when we invested at 23 cents, the share price shoot up to 50 cents when they were able to access all that ground. And so you've got, what, is it 500 drill holes?
538 drill pads. You can drill multiple from each pad.
So let's talk about why that's significant, because that can take months or sometimes years to get that sort of permitting. Am I right on that?
Correct. The timeline for that, it's called a plan of operations, or an MPO. It's about an 18-month process to get that. And so, if you look at the Northern Vertex disclosure, about a year ago, they got that permit. They were able to step off the operations and put leach pads onto public ground, unpatented ground, and then they were able to permit the drilling. So since that time that the permits were in hand, the mine went and has started to build on permitted pads on public ground, and then the exploration side has not really been worked on.
Yeah. And so this is kind of like the age-old problem you often hear in mining, and I can't even begin to list the number of companies that have said this, that we're gonna put our mine into small-scale production, we're gonna use the money to fund exploration, and we're gonna extend it, and blah blah blah. But what often happens in these situations is, production takes longer, is more expensive, is more complicated to get up and going and cash flowing than anyone anticipates. And this was in part way the case with Northern Vertex. It was just that the ramp up was slower. They had to sort out issues with the heap leach. They addressed all the challenges that are common within these sort of startup operations.
Correct.
And that in turn sucks up and consumes all the capital that was in theory going to be earmarked for exploration. So you've gone from being the CEO of two explorers to now running a operator with what intends to be a heavy exploring arm. Are you guys going to fall into the same trap here and be stuck in the day-to-day grind of optimizing an operation, or are you going to have the capacity, the bandwidth to really go out and nail it in the exploration program?
Well, you're exactly right, and that, it's actually a name for what that business model. It's called the Western Australian model. Very few companies, as you said, get to that exit velocity to actually become the producer and being able to take that next step.
Yeah.
And so, for me, I've actually been watching this asset for about a decade, and you saw how it went through, and now it's actually the operation, the day-to-day mining has been stabilized and has been working well, and it's moving out, and it's achieved that exit velocity, and now we're at the stage where we're comfortable saying, okay, it's time to make the capital investment in doing the exploration. Part of the merger with Eclipse and Northern Vertex was us being able to bring $20 million of exploration capital to bear on the project. That was the financing that we did in December of 2020. So the capital is there. The mine is doing well. It's got its own capital needs that it's able to cover, and then we're going to have the exploration arm, for lack of a better term. That's all funded and ready to go.
And so that $20 million is largely earmarked for exploration at both Moss and surrounding area and Hercules.
Largely, yeah.
Okay, so let's talk for a second about where you guys are from, I guess, a financial perspective. So right now, I just checked before this. You guys are trading at 38 cents a share.
Yep.
What is the market cap right now?
About $140 million.
140 million. And you've recently listed the warrants, right?
Correct.
And what are they trading at?
About a dime for the sake of the argument.
Okay. So we participated in the last financing. I participated in the last financing. Was it at 52 cents?
It was 50 cents a Vertex share.
Right.
We priced it all in Vertex terms.
Yeah. And so we invested at 50 cents a Vertex share. That gave us a half warrant executable at
80 cents.
80 cents. Okay. So now we skip ahead. What's it been? 6 weeks? Something like that?
Yeah.
So skip ahead 6 weeks. You're now able to, 1, buy the stock at 38 cents. 2, buy the warrant, a full warrant, not a half warrant, at 10 cents. So that comes 48 cents.
Yeah.
So not only are you getting a full warrant versus a half warrant, you're doing it for 2 cents cheaper than I was able to. And you don't have a 4-month hold on any of it.
Correct.
So is this a buying opportunity or a selling opportunity, would you say, for... Come on, I'm lobbing this one over the plate here. But it is a unique opportunity, I think. And, we haven't sold a share. We bought into this financing. And the reason I ask this, because I want to help paint a picture for people at home.
Yeah.
If this can be, theoretically, if this could be 2 million ounces in resource, producing 100,000 ounces a year, or, say, a clear pathway to how one could produce 100,000 ounces a year, what are these kind of assets valued at? What are they going for in this part of the world?
Oh boy, 100,000 ounce a year producer,
or even say, like, if you're producing 50,000 ounce, but you can say if we do X, Y, Z over the next 18 months or 24 months.
Oh, it's definitely a much higher multiple of what we have. There's an asset that's not quite permitted that I know of in Nevada. That's about a 70,000 ounce a year producer, or on paper hasn't been built, so it doesn't have that capital. Their market cap is much larger than ours. So I see, you look at. I'm just trying to think of a 100,000 ounce a year producer. What the core asset that they have in North Dakota, Wharf, is somewhere in that neighborhood. Mm-hmm. I think that they paid $400 million for it, and that was a few years ago. So, a revaluation off of that, given the higher gold price. So you start to see where the multiple.
Because you're trading at what, $130 million market cap?
140 Canadian, and that would have been a 400 American.
Right.
Yeah.
Okay. So, all right. So you do start to see what the potential is here,
yeah.
right? But we haven't talked about Hercules yet.
Correct.
Which is, the other piece of the puzzle. So, Moss, operating mine, exploration upside in Arizona, down the road, well, a little ways down the road in Nevada, just outside of Reno.
Yep.
We've got the Hercules asset.
Correct.
Totally different stage, basically grassroots exploration, would you say?
Pre-resource is what I would call it.
Pre-resource, but you've just completed a drill campaign, got results back. We waited ages and ages and ages to get those. I think we waited 4 months, didn't we?
We did wait 4 months.
I would like to talk about those results. I've got them on my little iPad here.
Yep.
Because, we have members. They see these results posted. They're investors in this. They're all smart people, but they're not necessarily technical people. Mm-hmm. And they say, okay, we've got 30.48 meters of 1.63 grams per ton gold and 18 grams per ton silver. What does that mean? So can we put into context what you've discovered here at Hercules and what that means in terms of what you're looking for?
Yeah, I mean, when you roll back my life, a year and a half or 2 years when I was CEO of Eclipse and stepped onto Hercules, or actually even before Eclipse was formed. What Hercules is, it's a huge near surface gold system. It is absolutely enormous. Now we've got drill results and a geological model that's giving us a predictable, a geological model that's giving us predictable results. We're seeing gold at surface, we drill the hole, we get the numbers. And that's ultimately the proof in the pudding. Now we can start to say, okay, we're going to start heading towards resource. What attracted me to Hercules, as I say, is the raw size scale of it. You've actually been to site?
Yeah.
And so, you've got a series of showings, the Hercules showing the cliffs, rattlesnakes, Northeast, Lucky Rusty, Sprite, Sirens. It's a monstrous project. And to be able to, A, get all the land, to be able to assess it properly, and then B, being able to unlock the geological riddle, now we're in a place where we can really start to unlock value for it. One of the things that I said when I first set foot onto Hercules was that it had the potential to be a generational mine, like that, multiple 20 years, and that's shocking. It takes a lot of time to prove that out, but you stand there on the ground and look at it, the raw potential of it is there. And as we've unlocked the geological mystery of it all with our recent drilling, we're now getting into something that we can move forward with and head towards resource estimates.
So let's talk about that for a second, the unlocking of a geological mystery.
Yeah.
Because, and you got to remember, you got to put this in terms of geology for idiots here. But I'm not a geologist, most listeners are not. But, most people, you go out, all right, well, you stick a hole in the ground and you look at the rocks and it's there or it's not there, right?
Yeah.
But it's not as simple as that. And you guys, did multiple drill programs. The second one is more successful than the first one.
Yep.
There are reasons for that.
Mm-hmm.
Can you talk a little bit about, in layman's terms, the process of what your initial assumptions were going in,
mm-hmm.
how you got those results, or what you got the results, how that changed those assumptions, and what you changed and tested that resulted in the second batch of results?
Okay, yeah, I mean, the original thinking behind Hercules was it was a classic epithermal system, and if you go to your geological textbook, and I have pictures on my wall, these things are shaped sort of like a Y. Mm-hmm. And so we were thinking cliffs, Hercules, and we set up our driller orientation to drill that way, hit those targets. What it actually turned out to be is a bit more complicated when you actually take a look at the more regional picture. Everything, it's not a Y shape. Everything dips in one direction. This is actually similar to the Comstock. Comstock all dips in one direction,
right.
but it rolls.
Which is just down the road, really.
It's about 20 miles to the west of us. Once we got that shape dialed in, we were able to change our drilling rather than drilling, trying to hit something square going this way from that side, flip it over, and we're trying to drill it square from this side.
So, and this might be complicated to do, but I've heard you credit Warwick with really figuring out this unusual shape here.
Yep.
How does he go? And for people who haven't seen this, when you get drill results back, you basically get a table of numbers, right? And you model it.
Yeah.
And what was his process to look at that and be like, okay, all right, we were wrong on round one, and these are the indicators that show, in fact, it's like this. What happened there? How did he do that? Because it sounds easy when you say it, but I know that a lot of late nights went in for Warwick, and a lot of time and energy and stress to really figure this out. So, How does that process work for people that have never had the joys and pains of interpreting a geological model?
Well, I mean, I'll first of all, talking about Warwick, he is truly special in terms of geological knowledge. I've known him for over a decade, only worked with him for about a year and a half, but he is truly special individual, up there, top 20 geologists on the planet, in my opinion. How did he do it? His mind is able to take a lot of data and think about it both in 3D and in time. So when he made the new geological model, he was incorporating surface mapping, surface sampling, existing drill hole data, geophysics that we had collected on the main showings. There was a recent university thesis that came out on our area. As a young geologist by the name of Michael Say published his thesis on it, bringing all that in, and actually between work and Michael Say, Mike made the first leap into this is all east dipping, and then having actually to step back and actually look at a very large scale as to what actually is driving the structure of this area. So it's a matter of looking at the minutia, stepping back to the large scale, seeing if it works, going back into the minutia, back out again, and it takes a special mind of somebody like Warwick, somebody like Michael Say, to be able to take all that and say, bang, this is what is happening. It's a massive synthesis of data and thinking about it in time as well, how things are moving out over time.
Mike, that is a great answer to that question. I did not know if and how you were going to be able to answer that, but that was a good one. Yeah,
Thank you.
That was a very good answer. Okay, so again, very simplistically though, now you've got an idea of what's actually going on under the ground at Hercules.
Yep.
You've got an understanding of the geological model. Is it simple from here on out? Is it just a matter of banging out more drill holes and away you go, or what's next?
I feel more comfortable with the geological model at Hercules than I ever have before. There's been a lot of challenges historically with, you'd get a hit, you'd get a miss, you'd get a hit, you'd get a miss. We got the new model that we created, and we had a 95% hit rate. Okay, that's giving me a bit more a bit more comfort working with it. Geology does make you humble, though. I mean, we've got a model that works for today's information. How it's going to change in the future, you just don't know. I mean, that's part of why the exploration and mining business is so humbling, is the fact that actually there's a great saying that Marcel de Groot has: God created gold and the devil sprinkles it around.
I've never heard that before. That's good.
Oh yeah, that's actually, I think that Marcel got that from David Lowell, another fantastic geologist. But it is complicated, and there's a lot of subtleties, and you have an idea. You think that we've got it dialed in, but we really, what our plan is for 2021 at Hercules is to confirm that we've got it dialed in. We're going to do a little exploration program up there, a couple of $1 million, really get ourselves a confirmation that we're going to have the success that we hope that we had. And then in 2022, then we're going to be able to step forward with a really nicely dialed in geological model and hopefully head towards a maiden resource at Hercules.
And what's the goal there? I mean, what's success look like for a maiden resource?
I'd like to get it over 1 million ounces. Given the scale of what Hercules is, that's actually not particularly difficult. I mean, the size of the structure, the size of the alteration, the width, the breadth of the mineralization that we've already defined by drilling and surface sampling, I think that we can get it north of 1 million ounces with our first pass resource estimate.
Now, something special or at least noteworthy about Hercules is you're getting good grades from surface, right?
Exactly.
Why is that important? Why should people care? For people who don't really have familiarity with this part of the world and how these assets work.
Well, for a couple of reasons. One, you're very quickly into rock that's paying for itself. So you've got mineralization at surface. That rock is going to go into a leach pad. You're going to be quickly into payback of your capital. The other more subtle thing, if particularly in this part of the world, is the rocks being exposed to surface are oxidized, and that's important when you get into processing. So something like the Moss, it's an oxidized deposit. It's an open pit heap leach target. Open pit, big trucks, big equipment, simple to do. Heap leach, low capex. You don't have a massive mill that you need to be constructing. Mm-hmm. So you start to think about look to the future and think about the potential economics of this project. It's trending into an area that makes it a more desirable asset lower capex, lower opex, and much more profitable and big.
Yeah.
And those are the things that make mining assets attractive.
Yeah, and I'll just sort of reiterate for people at home that, so many projects around the world, they don't have, I guess, the benefit of having ore grade mineralization, ore grade rock right at surface that you can throw through a mill and start making money off, not on day one, but pretty close. So many projects have tens of millions of dollars or hundreds of millions of dollars or occasionally billions of dollars of stripping and digging and just work up front before you ever really get a payday on the deposit. And when you get into that position, it really impacts the value of the asset. And it also limits the number of buyers for an asset that people can actually go out and write that $200 million check up front to do the work and get things done. So having this sort of near-term, I'm sort of maybe getting ahead of myself, but having the potential for sort of near-term at-surface mineralization is a huge boon, especially in a place like Nevada.
Yeah. And the other thing, when your readers are looking at the news release, there's another drill hole in there. It's hole 40, the last hole of the program, of course. The intercept is actually quite deep down the hole, and that actually doesn't scare me because of the geometry of the area. Now, you've been to site. This is the Cliffs target, and it's like this.
A lot of hills.
A lot of hills. We drilled into it, but it's actually relatively close to the surface because there's this side as well. Mm-hmm. So again, as you're mining, you're again close to payback. It's 200 meters down the hole, but it's not actually all that far from the surface, and it's relatively accessible by mining. All
right, got it.
Yeah.
Okay, we've talked about a lot. I said I was going to keep you for half an hour.
Yeah.
John, where are we? 35 minutes. Not so bad.
Yeah.
Is there anything I didn't talk about today that I should have? Anything exciting happening? Things people should be looking forward to coming up over the coming several months? I know it's summer coming up in Nevada and Arizona. Obviously, a lot of work's going to be getting done. Not that it's that hard in Arizona in the winter. Mm-hmm. What do we have to look forward to as shareholders?
Well, you sit here at today, and we're trading at 36, 38 cents, whatever that number is, and I'm here as the president of the company, and I'm feeling comfortable. Mm-hmm. One of the things that my job is articulate the upside, but protect against the downside. I have to protect shareholder value. We've got a permitted producing asset for protecting it against the downside. As I look around the properties and the assets and see the upside potential, this keeps me gets me to sleep at night. That downside protection is there. The upside potential is what gets me springing out of bed in the morning and excited to go to work. There's so much upside that we can articulate, so much value that we can create for shareholders. Downside is protected. Upside is all there, both at Moss and at Hercules. So for me, it's a really exciting time to be running this company and moving it forward.
So something else I wanted to touch on, you reminded me. So you've already had some success in M&A. You and Doug Hurst sold the Sterling asset out of Northern Empire to Coeur.
Yep.
Back in 2017, something like that.
Something like that, yeah.
Time flies, man. And
no, actually, it's 2017 is when we bought it. 2018 is when we sold it.
Okay.
Yeah.
The long project there.
Exactly.
But Doug Hurst, who's come on as chairman of Northern Vertex, he's had a tremendous amount of M&A experience throughout his career.
Absolutely.
For people listening at home and considering buying this stock, and they want to get an idea of the good hands it's in, can you give us a sort of a swift overview of Doug's experience? We might need to extend this podcast for half an hour.
There's editing. I mean, Doug is actually one of the more interesting people that you ever get a chance to meet. He was an analyst for a precursor to Sprott. He actually worked directly for Eric Sprott back in the day.
Okay.
He was an analyst, and so he knows through firsthand experience, what actually good looks like, and so that's been a foundational piece of his career. After he finished up with Sprott, he was a consultant for various companies, and he and another gentleman called Doug Silver were one of the first movers in the royalty space. They created a company called International Royalty Corporation.
Yes.
Their probably biggest success was they got the royalty on Voisey's Bay, or part of it.
Right. And they sold that to Royal Gold Royalties.
Royal
Yeah.
Gold, yeah.
It's like a tongue twister. That Royal Gold for, I think it was $700 million or
That's
something
correct.
in that ballpark, right?
Yeah. And so I teasingly, I somewhat liken Doug to being a professional poker player. He lives, he's not in Vancouver, he's out in Nelson, but he's enough into the game, he just watches deals go by. And if it's something that's interesting to him, he'll play in them. And then when you see him go in, draw to professional poker player, pocket aces, you see him push in big. So when we did Northern Empire together, Doug was aware of the Sterling asset, but when we actually did the site visit and he was able to see the upside potential, Doug went in big. He became the executive chairman and ultimately had that success. Another transaction, which is actually more analogous to what we're doing right now, is Doug was part of the founding group for Newmarket.
Yes.
They bought the Crocodile asset, Crocodile Gold, Fosterville, applied a whack of exploration capital, made the discovery of the Swan Zone, and were able to sell that company to Kirkland Lake Gold. Kirkland Lake Gold went from, I believe it was $8 at the time of the transaction. I think that they're trading now at $45, $50, largely on the back of.
And that's where a lot of Eric Sprott's money that's been funding the sector for the last couple of years has come from, right? Because he was a big shareholder in that group as well.
Correct, exactly.
And they sold it for what? Over $1 billion to Kirkland. I think.
It was the number that I have in my mind was it was $1 billion. Yeah. And this is what the quote unquote Hearst Allen business model is finding forgotten assets, whether it's the Sterling, Croc, or actually what Doug is involved with also is Caliber.
Yep. In Nicaragua.
In Nicaragua, those secondary assets within B2, put some exploration capital into them. That's what we're doing here at Moss, and then being able to articulate the true potential of the asset to the market. So, you look at the success, Northern Empire, Newmarket, Caliber, and now we've got Northern Vertex and the Moss going. You can see the pattern here. This is how it's going to work, and it's been successful for Doug and I in the past, and we hope that we have that sort of success in the future here with Northern Vertex.
All right. Well, I don't think we're going to find a better place to end it than there. If people want to know more about Northern Vertex, about Mike Allen, where do they go? Where do they look? What's your phone number so that we can get you day or night?
No. Northernvertex.com is the website going forward. Contact information is there.
All right. Mike Allen, Northern Vertex, thank you very much.
No problem.